notwithstanding COVID, I have tried to meet, I would say, substantial members of the Belgian business community, which is present here in Moscow, and that has been done mainly on a one-to-one basis or a one-to-two. This gives me, I think, a rather good idea of where we stand and also the potential that we have. And very briefly, I really hope that 2021 will be the year where we can leave COVID definitively behind us, and that we can look forward to more interesting things, just like reinforcing our business ties between the two countries. And with this nice, I think, wish into my mind, I hope, and I would like to wish you all the best for the next year to come, and pending the year we leave behind, I assume that it can only get better for once, without too much of exaggeration. So thank you.
Thank you, Mr. Ambassador. Thank you. Ladies and gentlemen, well, basically friends, because I think I know all of you, most of you personally, from the better times when we were able to meet in person. Still, it's always good to see you virtually as well. Glad to invite you to this, what is the final event of the year, jointly organized by the BRBC and the Belgian-Luxembourg Chamber of Commerce in Russia. To conclude, as the ambassador said, I think a year that as long as we live, and I hope you all live very, 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 very long, as long as we live, we will never forget 2020, with maybe a little tail moving into 2021 as well. 2020, which was a year which actually started rather uneventful, if this is possible in Russia. I remember from a business perspective, January was actually a very good month. February was actually a very good month. March, for most companies, yes, started as well very well. Compared to where we were a year ago, the macroeconomical situation in Russia looked well. Microeconomically, progress was being made. The government was getting focused on their national projects to give spending a boost, to stimulate consumption. So we were all thinking, okay, a good year for sure. And then indeed, somewhere mid-March, but it happened. That's the thing that I learned a long time in Russia, by the way. Every time you think everything is going to go normal, something happens for sure. So boom, but this time it was a global one. And Russia was confronted actually with two, you could argue, three crises at the same time, unlike many other countries. Yes, indeed, we were confronted with the pandemia, like all other countries did. But Russia being Russia, we also were confronted with an oil shock. And although the country today is much less dependent on export of hydrocarbons than in the past, still it had an impact on, for instance, the ruble depreciation. And then we had the third whammy, which was the geopolitical situation with indeed sanctions or rumors of new sanctions, and you name it. So three crises, as always, coming together at the same time, which was disrupting, of course, businesses for most of you. But then again, I think it says a lot about the resilience of the Russian economy, thanks to indeed solid macroeconomical fundamentals. I'm sure Chris will talk about that. That compared actually to quite some other countries, Russia, all by all, is weathering, touching the wood, the storm rather well, maybe with exception of the SME sector, which is hit particularly hard due to lack of, indeed, in our view, sufficient intervention from the Russian state. But this is how we survived 2020. This is where we are now. And to look a little bit and to peek a little bit forward, 2021 and beyond, we are super glad that what we consider in the meantime a very good friend of the Belgian-Luxembourg business community, Chris Weafer, volunteered indeed to talk to us. I think it's the fourth or the fifth time that Chris is speaking to our business community. Always very insightful. Chris, as you know, who is running a Micro Advisory, a leading advisory consultancy company, which is advising individual companies, which is also issuing very insightful reports on the economical, political development in this part of the world. And I'm sure, Chris, that all of us, we will be very eager to understand your views of 2020 and even more, how do you see 2021 shaping up? I pass the word to you, Chris.
Thank you very much, Johan and Oleg, and thank you again for inviting me back to speak to you and to your colleagues. Actually, I think you've covered a lot of it anyway, Johan, and your quick run through of this year. I certainly don't need to dwell on that. And also, you mentioned the tail coming into 2021, and really, I suppose that creates a lot of the uncertainty. We have to talk about different scenarios that might happen this year, because we're still, of course, not out of the woods by any means with regard to the pandemic, and in some countries, as we can see the last few days, it's getting worse, but at least we have the hope on the vaccine. So there is credibility, therefore, in talking about life after COVID and pandemic and what that might mean. We simply don't know, though, what further damage will be done in the meantime, or how long it will take, whether it'll be the end of first quarter or end of summer, etc. But at least there is a credible basis of optimism that we are near the end, even with some difficulties. This year, I throw up a presentation in a second, but this year it is actually. You made a very good point to remind everybody that how strong the start was in 2019 in January and February, and there was a great deal to be optimistic about at the start of the year, and that's when I'm hoping that COVID will prove to have been a disruption in that program, and that we will get back, therefore, to what we were looking at in January and February, and that will therefore be the backdrop for business and for movement forward when we get to that point. But to remind you, in January we had President Putin making very strong statements of intention to push ahead with national projects, with various reforms that aimed at improving the business climate. And in his speech, the Federal Assembly address in January talked a lot about the need to kind of restore incomes, real incomes, to provide improved social benefits, etc. All of which were very positive for consumer sectors, services sectors, kind of house building, all of those areas. But he was very clear statement on that. And of course, you recall also we had the government change, new prime minister, some other changes in government, all of which gave a very strong signal that the government was going to become a lot more serious and hopefully a lot more effective in pushing ahead the big spending programs, especially those linked to national projects that have been talked about and have been planned for the last couple of years. So it was unfortunate, therefore, that we did have that a combination of COVID and oil price to hit in March. But that's kind of where we're starting at, is there's nothing that has happened this year would give you kind of reason to assume that opportunity is gone. That's not the way I look at it. I simply see that opportunity in terms of business and development as having been interrupted. But in over the course of dealing with this pandemic, apart from the measures that were put in place to try and help the economy survive, we've also seen in the last few months more of a debate and discussion in government looking at its policies, looking at its program for developing the economy, for how to kind of improve business climate. And we're starting to see some more measures and refinements coming in. And therefore, I actually do start 2021 a little bit more optimistic that the government remains very much committed to that development program that it had talked about a year ago, and that we will see kind of more effective implementation of some changes to attract more investors and to try and improve the business climate, and to stay very focused, therefore, on the well, the development plan and the national projects plan. And it can happen, because that's kind of one of the reasons, I suppose, to be optimistic, is that Russia at least has the resources this time round. And unlike previous crises, you know, this is the fourth crisis that I can recall in the last 23 years, but unlike previous one, the government at least does have resources available. It does have money. It's got a low level of debt. It's got money in the National Fund. And as Johan also mentioned, the last couple of years, there has been a reduction in the vulnerability to hydrocarbon kind of volatility. In other words, the budget doesn't need as high an oil price as it used to. And certainly some of that is because of the ruble, or actually largely because of the ruble devaluation, which was painful for several years, but now has left a very positive legacy in the economy. So just kind of, you know, to summarize that introduction, you can say that there is no evidence that the government is distracted from the optimistic story it had a year ago, and that it fully intends to get back onto that program as soon as it can. And it has the resources to at least advance it for several years. Also, I think government changes that we've seen, again, some just quite recently, also confirm the view that we have, is that Prime Minister Michielsen's job is kind of to be an effective manager, to be, you know, I suppose in military terms, you'd say like the sergeant major, to get things done and to hold his ministers, his deputies accountable for failures, and to keep them online. And that certainly seems to be even more reinforced rather than less. The uncertainties, of course, simply are to do with the delays and how long we'll be dealing with the pandemic. So let me put up the presentation that I'm going to use, and this is where it usually goes all badly wrong. So 1 second while I just get that in place. Sorry, share the screen. And where's share screen? It's here, share. Okay, and then I know I've got to do something else to get the slideshow up. So it'll just be a second while that adjusts. I'm hoping. Sorry, yeah, that should come up. Should come up now. Sorry, 1 sec. Okay, so hopefully that's is now working, and you can see the cover page. So let me move to the summary, some of which I've already mentioned. You know, as we look into 2021, financial position is strong, and that's important because it does kind of it is a difference from previous crises where the government had to take kind of more emergency measures for longer. This time it doesn't have to do that. When they talk about running budget deficit of 4% this year, 3% next year, that's all affordable. The money is there. And it's important to emphasize that because, of course, with the sanctions kind of risk and in existing sanctions, the government cannot easily go out and borrow money in international markets. So the country has the 5th lowest level of national debt in the world and the 6th highest level of financial savings in the world. And that includes, you know, Liechtenstein and small countries. So in very good shape, but it doesn't have the same ability to go out and borrow billions of dollars on the Eurobond market or international markets that it used to because of sanctions. So on the one hand, you could say, yeah, the balance sheet's very good, but it also means the government does have to be careful. And this is something that we have seen a lot of and will continue to see. President Putin does not want to burn down financial reserves or to try and run up domestic debt too much, because it could leave the country in a vulnerable geopolitical situation, for example, depending on what happens with sanctions next. So there will be a continuation of the sort of conservative financial management, and that may delay some projects. I mean, in practical terms, you know, in terms of big spending projects and you know, the hope that we would start to see kind of more financial help being given to entrepreneurs and particularly small businesses, SMEs, as Johan mentioned. That's a huge problem for the economy. That's not very likely to happen too quickly because Putin is conservative on spending, and he will want the spending to go to areas where he can see kind of the quickest result or where he has got more confidence that the money will be used and help the economy. So whereas if we didn't have sanctions, they might be more inclined to borrow money and maybe be a little bit more willing to take risks. But anyway, that is a fact, and I think that'll last certainly through 2021 and maybe even to the end of Putin's term. There's discussion about when the economy gets back to pre-COVID levels. Well, look, that's your guess is as good as mine on that one, because we first of all have to know when COVID will end and finally be gone out of the system. But at least we know that Russia's in good shape, and when it does end, Russia will be one of those countries that will at least have resources to move forward and won't be looking at the wreckage so much as other countries with high levels of debt. The position from government, we've heard this a lot from various government officials, is that, look, we're not reliant on foreign investment. We're not expecting any. We'll deal with what we have. But yeah, that's the kind of public position, but it's not the reality. When you kind of talk to these guys afterwards, over coffee and explore this. No, I mean, the public position is kind of one of, I would say defiance is maybe the wrong word, but it's like, we can survive. We don't need foreign investment. It's been delayed by sanctions, but really you're going to see, I would expect this year, once COVID ends, to see many more incentives and efforts to attract investors. And certainly there's a big debate right now, in fact, a big row, I would say, over tax policy, because on the one hand, Finance Minister Siluanov is looking to raise more taxes, perhaps in extractive industries, of course, but other areas as well, because he wants to keep the budget deficit down. But on the other hand, it's quite clear that one way to attract investors is by giving tax breaks and tax write-offs and the amount of investment. And of course, Deputy Prime Minister Novak is really pushing this very hard on the oil sector, because he wants more investment into the sector in order that Russia does not fall behind in terms of market share when the OPEC Plus deal ends. So it's a real battle over tax policy. But one of the key factors of that is it is understood that there will have to be incentives to attract investors. So while Rishkin and others say we don't really need investors or expect them to come for a few years, in actual fact, every effort will be made to try and attract more and more this year. So in that sense, it's also going to be a good year. I think companies who are looking at possibility of expansion in Russia should be able to get good deals at a regional level or at a government level. And we're hearing this already, that companies are kind of negotiating deals in exchange for investment. And I would expect that to be very much a big feature in 2021 and 2022. And let me just, in the interest of time, because we want to leave time for Q&A, move on. So the themes for next year, say budget management, I've already mentioned. Tax will be a big part of that. I would definitely expect to see kind of more budget revisions taking place. Perhaps the next one might be in April, May, when hopefully we'll be a lot clearer of COVID and have a better idea of how the world looks. Then the budget will change again, and there may be tax changes in that. There'll certainly be spending changes. But national projects, I'm actually more optimistic on, and certainly we hear from people who are dealing with the Prime Minister's office is that this is Prime Minister Michielsen's key kind of KPI, his own KPI, is advancing national projects, showing spending and effective spending. And we will see more ministerial changes if they're not doing it right. Obviously the digitalization is the one that's lagging. We've already had a change there a year ago or earlier this year, but I would expect that people will be changed if they're not delivering on what's expected. And the good thing about this, because in the past that was always kind of a red flag, because spending money just to show results was never good. But at least now the involvement of Alexei Kudrin and the audit chamber is quite different than we had before. They are all over this and are reporting directly on what they see in terms of inefficiencies and wastage, etc. So at least there's a bit more oversight to this urgency that we didn't have before, which is also, it's a positive movement in the right direction. And in terms of, I think the environment, obviously the carbon, we see that as being a big issue, particularly as European Union is now moving forward on its own sort of carbon reduction strategy. And clearly stated that will be looking at tariffs on goods coming in from countries that are not compliant, and that potentially is a big risk for Russia. It will tariffs on goods going into European Union from Russia at this stage. Certainly that would be a substantial amount of money. So Russia's got to do something about it. And I really wouldn't expect a whole lot this year. We are still, we've seen this many times before when it comes to big strategy changes or big policy initiatives. You always get a couple of years of fine statements and statement of intents, but you really don't get any action in terms of effective spending or real changes for a couple of years in. And I think that this will be the same. And one reason for that, not wishing to be overly cynical, but one reason for that, of course, is that somebody has to make money out of it, in the sense that we don't yet know who will be in charge of some of these big environment programs or carbon programs or even renewable energy. And they will be, billion-dollar projects, and therefore there'll be a lot of money to be made in them. And as always, there's always a big fight, behind closed doors as to who gets to run these programs and who gets to be in charge of allocating these budgets. So that usually takes a couple of years, but I think the process has at least started. So it's kind of good news, bad news. It's not going to be quick. And it'll be all done at the last minute, but at least the process has started. And I think the same with in terms of investment in the Arctic, that will be a much bigger theme this year. We already know the US wants to make it a big theme. President Biden has made it very clear that this is one of his priorities. And we also know from what we see in the Chinese side that they want to also engage much more in the Arctic with Russia. So again, investment in Arctic and transportation, as well as resources, in addition to the environment and science and military, a lot more, I think, increasingly on the Arctic. And I do think the consumer sector, when we get clear of COVID, because this is a theme that Putin has referred to several times, and it was a big part of his January speech, his commitment to kind of rebuilding real incomes in real terms, the lost disposable incomes that were slashed in the last 6 or 7 years because of the ruble devaluation, because of the slowdown in the economy. He has made it very clear he wants to restore all of that and build on it in the next couple of years. And I think this will be important, obviously, for this favorable backdrop for whatever he wants to do in terms of his future, whether it's to run again or to have a position of power outside the formal office of presidency. But we've always seen this, being able to show strong public support, particularly amongst his peers and the other people in the Kremlin, has always been important. We certainly saw that in 2008. I think the same again. So he's going to have to deliver, and will try to deliver, I think, on the consumer and services sectors. And that's, I think, going to be very positive for, finally for, durable goods sales, for housing markets, and for those areas kind of linked to housing, to the middle class, or to people in general. And then, of course, I just mentioned politics. We have the big event this coming year, provided there are no surprises, and there always will be. But right now, of what we know, that the major event will be the Duma election, which is currently set for September. And that would be because this finally will change. And it's important for business as well, because the Duma will have more influence and will be more important after this next election because of this year's constitutional changes. And apart from the fact that they will have a veto or a say on prime minister and ministers, there will also be important in terms of legislation, and Duma committees finally will start to become a lot more important. And so, big foreign companies working in Russia will now have to pay a lot more attention to the relevant Duma committees in their industry, as you would do in Brussels or Washington or other countries. This is will be new. These committees and people on these committees will be more important, and they'll be important for business development, for problem solving, for competitive reasons. So that's going to be, I think that's the major event this year, but I would certainly expect that we will see lots of protests in the summer, maybe the legacy of what happened to Navalny. But as we come up to the parliamentary elections, undoubtedly there'll be another catalyst for protest, but not nothing more than we've seen in the past. To mention, we don't really need to go much in COVID. I think everybody is very well aware of all the numbers. The only thing we can say, and which remains the case, is that the government appears absolutely determined not to go back to a lockdown of any sort. So there's no evidence of that, and the numbers really don't even kind of suggest it's possible or to be forced into that situation. So restrictions, as we currently see, lasting and could very well be even extended depending on how things are in January. But we are still very well 80%. Of the opinion that there will not be a full lockdown kind of in Russia, and there's no reason to assume it will be. But clearly, what we've had in terms of the last couple of months in terms of the restrictions are having an impact on the economy. We show that in our forecasts. We were recovering nicely up to the end of September, early October, and then the lockdowns have certainly hit services sectors and other sectors as well. So that recovery trend has certainly been derailed from what we saw in particularly in the third quarter. So that's kind of the impact there. And it means therefore also the government is not going to roll out some big spending programs until it's sure COVID is firmly on the way down. And I guess that'll be linked to vaccine. Very quickly, and I won't spend too much time on these slides, the full presentation pack with lots of appendices and explanations is available with Oleg, and I've told him he can send it out to everybody afterwards, make it available. But you can see here what I'm saying about October. On the left-hand side, this is the economic indicator. It's a very clear proxy for the economy. And you can see that recovery trend that we've had from in June, July, August, September, and it's reversed in October. And that's because of the hit to services sector, consumer sectors, as the restrictions came in. So in that sense, I would expect that November would also be a poor month. But you're not talking about disaster. You're not talking about a return to the Q2 decline. In the global scheme of things, Russia's kind of contraction this year is not bad. It's fairly modest. But do bear in mind, of course, it's the mathematical effect, mathematics effect. A sort of good news, bad news. The bad news about Russian economy always, as we know, is that it is too dominated by the state. State is over 60% of GDP, and by big, what we call legacy industries, perhaps extractive industries like that. The percentage in SMEs, entrepreneurs, is far too small. And for any economy to grow and to really change, you need it the other way around. You need SMEs to be certainly 2/3. And that pretty much is the way it is in China and Brazil and other countries. So it's the wrong way around for in terms of getting up to higher levels of growth and really changing. But this year it helps because the SME sectors are all being very badly affected, but they're a small part of the calculation. The big companies, extractive industries, are not so badly affected, and they, of course, are the biggest part of the calculation. That's why the number looks okay. If you were to do this for SMEs only, we'd be looking at -15% by our estimate for this year, and probably -5 or 6 for 2021 as well. So a real difference between what's happening at the top of the economy and what's happening at the SME and services. Project, I'll come back to that in Q&A because this is all changing, but again, it's still very much the core of what the government wants to do in this decade. And the nice thing is it's no longer a 5-year plan, it's now a 10-year plan, which is more realistic. But it's still the core, so it will change, and numbers will change, priorities will change, and I guess we could all understand which ones are more important than others. So, but the principle is not changing. That's kind of the whole point of putting this up. We're not going to abandon the national projects. We are not going to abandon the objectives. We're not going to abandon the kind of relative importance in terms of spending. There'll just be differences in terms of speed and delays, and some more important than others. So it's still relevant to look at this in terms of planning and where will the big project spending be in terms of infrastructure and digitalization and technology, et cetera, and obviously now healthcare, et cetera. That's still very relevant. So that you're looking at your 10-year plan, business plan, it's still at the core of it. And of course, when you expand this out, you know, this was, say, 350 billion program. But when you add everything else to it, such as Russia's plans to localize turbine construction, for example, and other investments in the technology sector and the hydrocarbon sector, you can double that amount. It's 700 to 800 billion between now and the end of the decade. And say it is affordable, but it will require a lot of co-investment after the first couple of years. The budget deficit, again, this is what has been published. It's affordable, so no need to spend too much time on it. There's nothing here to worry about. These are not ambitious targets. Russia does not need to go outside to borrow for any of this. It's all perfectly affordable within the country and within existing resources. So there's absolutely no red flags flying on financing whatsoever this time around. On the currency, just to spend time on that, because this is important. And to remind you, what we've seen this year is that the sanctions sphere has been the biggest driver of the ruble this year. If you look at this graph here, you'll see on the first couple of months, the ruble weakened from 62.5 against the dollar up to 80. That was the oil price collapse running up to the OPEC plus the disagreement, but it was the oil price collapse. And then you saw the OPEC and Russia and Saudi in particular did a deal, and the ruble came right back down to 67.5 or whatever it was in June. And then the sanctions kicked in. Remember, if I remind you, there was a lot of talk in the US, allegations that Russia was paying a bounty in Afghanistan, and then the whole thing about fears about election interference and kind of the momentum build. And even though the oil price recovered, through this period, I think the oil price went up by 45% from the 1st of July to the end of September, the ruble weakened because the sanctions sphere are more important than the oil price. So now we've seen the we've seen the ruble recover recently. I think it's 73.5 today against the dollar. And that's been, yes, the oil price has moved up, but it's mainly the ruble started to recover on November the 5th. In other words, when the US election was over and it became clear that Joe Biden will win, the traders started to relax about sanctions fear. Now, whether that's right or not, we'll wait to see. Whether that's been overly optimistic, I'll have one brief slide on sanctions coming up. But that's the reason the ruble has now recovered, is because there is a sense that, well, sanctions won't be as bad because Trump is gone and the oil price is stable in the high 40s. And if that remains, if we get into the first quarter next year and we see the oil price hanging at around $50 or even in the mid 40s, and there's some favorable comments out of the US about Russia, or at least nothing bad. Favorable is too much to hope for, but not bad. Then I would expect to see the ruble going back into maybe 68, 69. And we do know from talking with finance ministry and from other people in government that they are much happier with the ruble at 65 against the dollar, and then whatever the equivalent rate is for the euro off the dollar. That's the ideal number that they have, because they feel that's the right balance between creating competitiveness and helping to boost exports, as well as kind of reflecting the need for attracting investment and of course companies that have to buy in equipment and ingredients. So I do believe that hasn't changed. If the government had a magic wand today, they would pitch the ruble at 65 against the dollar and hope it stays there. For the next couple of years. So, but in the meantime, certainly sanctions and to some extent oil, but it'll mainly be sanctions in the next few months. People will watch. Interest rates. Well, there's actually is worth mentioning because the central bank have their policy meeting on Friday. We expect them not to do anything, and there will be a lot of discussion about inflation. And you've already heard this from President Putin, he's certainly making very clear his disappointment that inflation is rising higher than expected and demanding action. So that probably will mean a broader use of price caps in some key areas, certainly in food, but we may get it on fuel and energy as well as has done in the past, or use some utility sectors. So there's absolutely a determination to try and cap inflation rise in the next few months. And if there's any danger of it going higher, then you're going to see a greater use of price controls and price caps, because Putin does not want inflation to go back up, because opinion polls show that pretty much ranks as one of the top 3 concerns of people, and one of the trends, if not handled, that could certainly undermine support for him. So inflation is important to watch. We expect at the end of the year about 4.5%, about 4.4%, might go up to about 5% in the first quarter, but then should come rattling back next summer, and especially assuming if the ruble doesn't depreciate. But that's what you're going to hear from the central bank on Friday. And then just here, these are forecasts, just to summarize what I've been saying. Again, it could be 3.8% decline this year. It'll be between 3.5% and 4%, because we're now seeing this decline in the fourth quarter. But the main point is recovery in the next couple of years won't be great, because the structure of the economy doesn't really allow it. Investment spending will pick up slowly. When we roll out 2023, I probably will be more optimistic and get up over 3% growth for 2023, because I will assume higher levels of investment in that year. But again, you're not talking about anything dramatic. And the budget, the oil price, the ruble, again, you can see that I'm actually assuming the ruble. In fact, if because of the way things appear to be changing on sanctions and the oil price, I would expect the ruble will end next year probably closer to 65 rather than 69. And the same then 2022. So I think they're kind of a little bit pessimistic for 2021 on the ruble forecast. So again, I see them drifting in that right direction, assuming no more poisonings or the usual things that we always have to worry about. Domestic politics, just very quickly on that, because I do want to leave time for Q&A. The main event this year, of course, will be the Duma elections, but also, we're hearing constant rumors about Putin may retire, maybe ill. And again, that's not going to get any better. We will be dealing with these rumors. And of course, it's not impossible. There's nobody can say that President Putin will not surprise us all on New Year's Eve and say something. It's perfectly fine. It's unlikely. And I would say that that's a very low probability, I think, because what we're seeing Putin doing is actually preparing changes for longer term with the Security Council, with the Duma elections, with the constitutional changes that we've seen. And now, of course, we're all aware of all of the changes that are happening within the security services, the FSB, and there's a lot more to be done. So that's the reason I wouldn't expect him to surprise us too soon, because he's in the midst of making these changes, long-term changes, and far from being done. When they're done, then he may leave a little bit early if he's going to leave. But I think a lot will depend the next couple of years how these play out. Regional politics, it's certainly my view that Lukashenko will not see next summer. I think that's already been agreed. I don't know, everybody's probably aware of the rumors that they're building a house for him out in Rubliavka. So I don't know, but I think it's definitely now accepted by everybody that he has bowed to the inevitable, and that there will be maybe a constitutional change or another election, but he'll be replaced by somebody that is approved by Moscow and supported by the local elites. So, but I think that's how that'll play out, rather than becoming something much more aggressive that could then lead to another point of friction between Russia and the European Union. That's the real danger there. But I think we're past that. In Armenia, also, I would expect elections in Armenia, parliamentary elections, maybe by next summer. I think Pashinyan has no choice but to go back to people and look for either a validation of his mandate or to allow people to replace them. But I think that's now inevitable given what's happened. Kyrgyzstan, the election is next week. It doesn't really matter. It's just rival clans, I think. No, it's not going to cause it an issue for Moscow. Georgia looks to have settled down. Kazakhstan election is January 10th. That's important. I would expect a lot of things to happen in Kazakhstan next year. I think President Tokayev is really preparing to go after people that were prominent in Nazarbayev's inner circle or his business circle. We've already, of course, seen that big Financial Times report about Kalabayev. allegations of corruption. That is what we were told to expect, and it is what I would expect more of. Tokayev is definitely going to emphasize the anti-corruption message in order to build his own support and his own team. And therefore, I think there will be disruption there, but it shouldn't disrupt the economy too much, but it would probably be more disruptive in terms of, whatever projects some of these people are involved in, and if there's investigation, how they got them. That's the sort of thing I would watch. And I can go back in Ukraine if you wish. So on geopolitics, I'm going to kind of wrap it there. I do believe that one of the key priorities for President Putin, for the administration at the start of this year, was to really try to rebuild relations with the European Union. I think very much focused on France and President Macron. And of course, that was all disrupted with COVID, but of course, with the Navalny poisoning as well. But I do believe that remains the most important kind of geopolitical objective for Russia in 2021. The US is kind of, it's too damaged, and it's kind of hoped it just doesn't get any worse. And we hopefully get progress on nuclear issues and the START treaty. And if that gets done, then at least you'll have hope that it might extend into other areas in the next couple of years or through the term. But nothing really material in 2021. But 2021, absolutely try to improve relations with Europe via France. I think that was the priority and remains the priority, and hopefully that will lead to some actions being taken, perhaps concessions with regards to Donbass, East Ukraine, something that would show positive action from the Russian side. But I do believe that really is the big priority. In terms of US, we will get CBW linked sanctions. It's overdue. Remember, the European Union imposed sanctions on people like Kirienko and a couple of others, which was a surprise. US will probably do exactly the same. It is kind of almost in the system, so it's not an indication that the new Biden administration is going to be as aggressive with sanctions as the Trump one was, or Congress within it. No, it's overdue. It's independent trade. It has to be done. And then after that, we'll see what happens. I can address questions there. It's in the presentation. I will just show you the slides of what's happening there, particularly, I guess, in LNG, very much investment into areas that can sustain production for the next 10 years rather than build on it. Big move into petrochemicals, a lot more investment into chemicals and petrochemicals. We've already seen that starting, and I think that will accelerate. And I already hearing of a couple of very big projects that are being talked about in partnership with China, CNWC or Sinopec in one case. And I think there'll be more of that, trying to add value. I know that's kind of an old cliche when it comes to resource economies, but I think, selectively you can get some progress on value added in extractive industries, and petrochemicals and chemicals generally, I think, is one of those areas I would expect to see a lot more of, as well as an effort to try and become more self-contained or localize more of the engineering linked to these big projects, and hope that the US won't try to hamper them as much as they did in the previous 4 years. And carbon say it's on the agenda. It will be a couple of years, I believe, before you start to see real money being applied to real projects. Say the internal fighting has to happen, but at least it's good politics. And again, it was another reason why Russia embraced it and signed everything and endorsed it, because it helps with the French relationship, of course. And I would expect more of that. And the Arctic, I mentioned, we can talk more about that if you wish, but it's one of those that I bring these slides just to highlight the fact that at Macro Advisory, we are now moving a lot more into coverage in these areas: renewables, environment, Arctic, looking at the investment, cooperation, investment potential for all of these areas. And we'll be doing a lot more work on this, and linked to that ESG, which we're now covering a lot more actively for companies and helping to explain it. And challenges we have. Actually, I just mentioned this one because it just came up today. The migration service announced that they'd only registered something like 8.5 million workers this year, first 10 months this year, when it was 16 million for the first 10 months of last year. Now, yeah, that's understandable, I bet, because we know migrant workers tend to go home in periods of economic downturn. But it is also the reasons why a lot of companies are facing worker shortages, particularly in low-skill areas. So, as some of my colleagues pointed out today, if you're now waiting for food delivery or a takeaway, it used to be 15 minutes, it now could be an hour because they don't have the delivery people. And you know, that's kind of one obvious one. But it can extend if it's not addressed next year. So Russia really will have to try and bring back more migrant workers and hope they don't go elsewhere, hope they don't stay at home. Otherwise, that could be a factor that we haven't built in. And we will need to build into, you know, to economic progress, particularly in some of these areas. And opportunities, I've mentioned, and I need to go over them again. I think that this is one thing I constantly say to people is that crises are always good for Russia afterwards. And in the last 23 years, we've always had positive changes as a result of crisis, of dealing with crisis. And I'm hoping this time round, it will be kind of much greater effort to improve the business climate, to investment climate, and hopefully there won't be any more Vostok cases or anything like that. But I do believe that there will be a much greater effort to try and attract more investment, despite the fact publicly they're saying they're not expecting that to happen. But below that, they really do know they need it. And hopefully there'll be more efforts to try and improve that. And then, you know, here we're just looking at the sectors that I mentioned. So I'm going to stop sharing now. That there are more slides in the presentation, you know, in terms of appendices and our numbers, for example, and our full forecasts, and this one here on politics, and say, Oleg, you absolutely can free to share that with anybody afterwards. So thank you very much for your attention, and happy to address any questions that you might have.
Thank you very much, Chris. As you say, I will share after the webinar today the PDF files which Mr. Weafer provided to us with all of you. Johan, I know that you have already one question.
Yeah, thank you, Oleg. Well, first of all, Chris, thanks a lot for the fascinating presentation. Very insightful as always, and I think we particularly appreciate the soberness in the good sense of the word. How you're presenting the Russian economical political dynamics. It's a good antidote of what we often read in the Western press about this part of the world. We sure. know that. But exactly because of this, you actually intrigued me, if I may, 2 weeks ago. Because 2 weeks ago you distributed a note which I found a bit atypical coming from you with the title December, I think it was December, surprise gossip, or is there a risk of a December putsch? And you pointed out to a number of things that recently happened, starting with the Navalny poisoning, what you mentioned, the rumors of Putin having the Parkinson disease, the mention in the press of the apparent extra illegitimate daughter that the president has, then the Shamalov email leaks in the press, which is showing that the good gentleman for $100 was able to buy what is it, 3.5% of the shares in Sibur. I mean, I would double that amount for sure.
That's a good idea, absolutely.
And you said, look, I mean, this is indeed atypical because normally the press, especially the broader press, would never ever report on such things if there would be some currents in society yes. which are not happy with the incumbent administration. You said there are